The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sean in Canada. Hey, Sean, what's going on?
Hey, Tom. How's it going, brother?
It's going great, man. How you doing?
I'm a huge fan of the show. I just found out about you guys within the last month and a half.
Okay.
And I can't believe, I'm like, where did these guys come from?
How did you find out about us?
Sometimes I'll go in the search engine and try to find some market analysis.
Okay, man. Welcome to the Tiger family. Appreciate you growling and prowling with us, man.
Yeah, man. I really appreciate you guys, and I'm just excited to watch your bids. I get a lot out of them. I really love the intros you do and the excitement and the energy, and you guys are pretty special.
Well, we get a great network, man, and there's a lot of diversity, man, and we're really lucky. Thank you so much for calling, man.
Thanks, buddy.
Thanks, Sean. Have a great one. Have a safe one.
You too, bud.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Hope is a renewable option. If you run out of it at the end of the day, you get to start all over again in the morning. How's that? Market-wise, let's take a look at it out here. We have the Dow Industrials up 94, NASDAQ up 77, S&P's up 17, gold contract up $20, trading at $1,242 an ounce. Silver up 14 cents at $15.33 an ounce. Platinum up 22 bucks at $9.67 an ounce. Light sweet crude down a buck at $38.32 a barrel. Bonds, the 10-year note up 20 ticks, 130.01. 30-year bond up a full point, 164.19. King dollar down 825 ticks at 95.11. The euro is up 103 ticks, trading out at the 112 area, and the yen is trading at 112.72. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. We go over to the SPY. What do you have is this? Good old Janet Yellen talks at 12:20. The helicopter money's on the way. Everything's cool. Bottom line, markets love it. We are up $1.77 on the SPY. You've done 67 million shares. Now, check this out. This is going to be pretty wild. We're at 205. 205.23 is another small ABC structure inside a larger ABC structure. This baby's on its way to 211. The largest structure is 211. This structure here that you're in is an 8-point ABC. We'll see whether we get it. That would lay out at 209.74. So bottom line, folks, markets want higher price. And what we have here is that window dressing doesn't start till tomorrow. So you're going to get more juice in this market tomorrow and the next day. That's your S&Ps. We go over into the NDX 100. We look at the three Qs. What do you have with the three Qs? Three Qs are up $1.70. We have done right now 20 million shares. You've taken out 18 million. Guess what? You get a small ABC up. Your 8-point on this is 103.31. That was the low that was established out here on March 10th. You got 103. Your B point is 108. So you get $5, and your C point is 106. That gives you a 111. Right now, guess what? We're only at 108.81. So you got 111 coming at us inside the Qs also, and which is pretty wild here, man. So your swing point up here anyway is 114.54. That's where that baby wants to go. This thing's going to go north. Gold contract. What do we have with gold? This is a classic, no doubt, folks. You take a look at the gold market. What you have is this. Gold today up 20 bucks. You've done 182,000 contracts, and if you want to see just a classic market, time in the trade, all of the above, what do? Bottom line is that we had gone topside on the February 11th. You did 233,000 contracts. The low there was $1,198. What do we do yesterday? You get down with 88,000 contracts to 1207. See ya, don't want to be ya. What do we have today? 182,000 contracts. Wide price spread, accelerated volume, all of the above. This very well could be another ABC structure up. 1392 is the game point anyway. This ABC structure would take you to 1423. Bottom line, wants higher price. Notes. Let's go over to the notes. Now, this is going to be intriguing coming into the close out here because the notes got a bid. They don't have the volume behind it, but they got a bid. The notes right now up 21 ticks. You've done 943,000 contracts. You're coming into, the downdraft because this was a confirmed ABC structure on the way down. We had broken a B point with 168,000 contracts, and we'll see if this price does hold coming into the close. Then these notes can run up to 130.27, which is almost another whole point up. So we'll see. What has happened in the past 8 trading days is that each and every time you're coming into the close, they were selling those notes away. King dollar. What do we have with King dollar? King dollar wants lower price. Volumes come in. King dollar, all of the above. King dollar out here, we've done 29,000 contracts out here today. Same type of deal. Last week, you talk about it. This is so cool, folks, because it's so sick how it went up, too. So check it out. We had come down on March 10th, and we come down with 71,000 contracts. We went to lower prices. We went to 30,000 contracts, and that's when we get down to $94.67. Last week, so remember those numbers. You come down on 71,000, you come down on 30,000. Last week, what we did is this. First day, Monday, went up on 12,000. Tuesday, went up on 20,000. Thursday, went up on 14,000. And Monday, yesterday, we did 13,000. What do we do today? You get down to 29,000. This is going to be a large ABC structure on the way down. This baby wants to run down into its August 24th swing low, which is 92.50. I suspect tomorrow, and what you also have here is you have multiple ABC structures on the way down. I suspect tomorrow this is going to go after the B point, which is not far away from where we are, and do another ABC down. That B point is laid out at 94.60. Right now, you're at 95.10. Our phone number is 877-927-6648. We take a look at the IWM, the small caps out here. What do you have with the small caps? Small caps, that's also going to take a B point out of an ABC structure on the way up. That B point is laid out at 109.94. You had 29 million shares. Yeah, it's done it. Now, this is a large one. They're the small caps. This is going to be a large one. And what that's all about, folks, is that you not only have the commodity, well, you have the commodity small equities running. That's what this is all about. The A point on the small caps, the IWM, is $98.97. Your B point is $108.99. So we're talking, you're talking $10. Your C point is 104. That gives you a 114, and 115 is your swing point out there from December 29th. So bottom line, this window dressing, they're going to run it right up into window dressing. We'll see how it reacts when it gets up to those highs. What I do expect is that I expect you're going to see that those highs get spiked and then just give it up in spades. It's a beautiful thing, folks. You talk about a consolidation. This is a 3,000-point consolidation in the Dow. It's a 300-point consolidation in the S&Ps. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow up 102, NASDAQ up 80, S&Ps up 18. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up 100. You get the NASDAQ up 80. S&Ps are up 18. And percentage-wise, this is what you have out here, folks. The Dow's up 0.5%. The S&Ps are up 0.7. The NASDAQ is up 1.7%. And as we do each and every Tuesday, folks, in the first hour, we get our man, Mr. Basil Chapman, up. Now, don't forget, folks, at TFNN, Monday, Wednesday, Friday, we start at 8 o'clock in the morning, live content to 5 in the afternoon. Tuesday and Thursday, we start at 7 o'clock in the morning to 6 in the afternoon. That's all live. Of course, we stream 24 hours a day. Now, you can get all of it right on your cell phone. Just go to TFNN.com, hit Tiger TV. You're going to get the audio. You're going to get the video. It's great HD quality. Our man, Mr. Basil Chapman, does a great show every trading day, 11 to 12 Eastern Standard Time. So no matter where you are in the world, you can get the show. He also has a great newsletter, The Opening Call. Now, tomorrow night, he is going to be doing an outstanding webinar. And you talk about the perfect time to do a webinar. We're coming to the top of this consolidation. And what the webinar is all about is it's the 3-month outlook in the market, which sectors could fail and what sectors could rally. Now, this is for subscribers, but you can be a subscriber right now for absolutely free 30 days. You come to our website at TFNN, you test drive the newsletter for 30 days. You get into the workshop tomorrow night. It's from 6 to 7:30. Basil Chapman, what's going on?
Hi, Tom. How are you?
Doing great, man. Yourself?
Good, thank you.
Good. So, first off, let's talk to me about the workshop.
So in the workshop, let me just do this. I'll put it right up here. This is right from one of the slides. What we will cover in this webinar. Number 1, March monthly candles. That is the candles that we are forming right now that conclude on Thursday when the month of March ends.
Okay, yeah.
I'll be talking about that because it's really important how some of these candles, I'll show you in a moment, what they mean in terms of the monthly charts and the kind of progress that we've made up until now in many sectors, and some sectors they're starting to fail. So that's going to be very important. What sectors are favorable and which are unfavorable, as well as the stocks within that, and then also the stocks that are giving economic clues as to what's going on deep down in the economy, the relationship of commodities to the market, and of course with Yellen at 12:20, you just suddenly saw gold spiking. So that's going to be very important. Actually, her timing for me was perfect because it's telling me what we can expect. It's telling me that the Fed is out of the picture in a way, and that's very important. So
yeah,
we're
you know
looking
what's
at
amazing, Basil and folks, is that this speech ended up being a big speech. Normally what ends up happening is that, when the Fed meets, that's normally when most of the news come out. But if you hear the speech, bottom line, she made things real clear that, hey, guess what? Rates aren't going up right now.
We're not sure. We're not sure about the world economy, and we're not doing anything. That's basically it, right?
Right.
And in a way, that's what you said the last time as well. It's just much more meaningful now because it makes it look like that bump up in December was something that was an aberration.
Well, and I guess it's 3 weeks later, and all the numbers that are coming in, the numbers are good. So, it's
So now
saying, listen, the numbers are good, and we're still not going up, right? I mean,
that's the interesting thing. So now we're getting some of the numbers that are very good, and some of the numbers are starting to fail. You've got Triple M, a very good example today. It pulled back on a little bit of disappointment, and yet it really wasn't bad. It was just a little disappointing to what was expected. So I'll be talking about that. I'm also going to be talking about the sentiment indicator that I use a great deal, the VIX, the volatility index, and I'm giving numbers so that people can use them themselves for areas that, if the VIX goes down to a certain level, what you can expect, if it stays in a certain range, if it goes higher, when does it become overbought? So that's very important. Now, then I'm going to continue with that match with the late 1920s. There's still so many things, especially the whole aspect of the building industry and skyscrapers. Every institution has increased its size just around the country. And everyone talks about the economy's not doing well, and yet you look at Boston University. You can go through all the universities.
well, you just brought something up great. Okay, everyone talks about the economy not doing great, but the economy is doing great.
It has to be doing great, and one of the things we spoke about a while back.
Factually, it's doing great. The hilarious part is that people keep saying, well, it's not doing great. It's like, really? Well, what number are you looking at?
But if you look at the RTH, the retail index, that just recently reached all-time highs. So something's working. So I'm going to be discussing that. I'm also going to, I've got questions that have been asked, and I'll take live questions as well. I'll answer those questions. We'll use the live charts. But really, I'm also going to be doing, what's the relationship? Now I can show you something. The relationship of the Elliott wave, and this is going to be a big question. You see this chart right on the left is the Dow Daily,
okay,
and if the Dow Daily takes out 17,648, it is recycled to the upside in the daily chart. But the weekly chart, there's this weekly chart in the middle, there's this resistance level it's been struggling to break out of. But the monthly chart, I'm going to open this up so you can see it. This monthly chart, when you think that at this particular point we are 700 points away from the all-time high, we've taken a year to consolidate. So I know that you're looking for, when we conclude this move, you're looking for a very sharp decline. And the way I'm looking at it, and I'm going to go to another chart here, this chart that I'm going to be discussing in great detail. This is the Elliott wave that I discussed. And Elliott wave 4 was the one I expected last year, and I said I did a webinar right here where we were looking at the Dow at 17,977, just 400 points away from the all-time high, and I said if it breaks out, I need for Elliott wave 5 for the Chapman wave itself to recycle to the upside. I have to get above. I have to see the Dow go to 18,352. 1 point above the previous high. For me, that's a recycle. So that's going to be very important, because that, I believe, would start the leg 5, and that 5 can be really exciting to the upside. But we know that there's a lot of resistance up above, and we don't know if this particular moment now is selling pressure that suddenly turned into intense buying pressure by the funds as the end of the month is coming up.
Sure.
So I'm going to be discussing all of those aspects. And here's another chart that I wanted to show you. You're talking about the S&P. Well, the S&P, SPX.X, here we are again. Look at that candle. This is March candle above the 9-period exponential moving average, is starting to fight this arch formation. So, and the MACD and stochastic are not very good, but I like to think that price is the arbiter of a trend. And so far, the price is acting very well. So it's a lot of decisions have to be made, and I'm going to try to make some of those decisions between now and tomorrow night at 6 o'clock as to what people should do in terms of their own, if they have mutual funds what's the outlook? Are we going to go to all-time highs? What would you do if you went to all-time highs? Could that be a double top failure? What would we be looking at, and how can we trade it? And if we're going to pull back, what kind of pullback could we expect? Could we expect to go all the way back to the bottom, the 15,500s in the Dow? Or is it going to be a pullback that is a little scary, but then find support and then rally? So this is really a fascinating period because, as I say, a year we've been consolidating, and here we are just 700 points away from an all-time high. A lot of the sectors have done. Look at the XLK. This is the select
Folks,
technology.
Nice. And you can come over to our website at TFNN. You'll see it right in the front page. Big change. You'll see it right on the front page of the coming 3-month outlook for the market. You can sign up for his newsletter right now, 1 month. You come in the newsletter, the webinar tomorrow night, 6 to 7:30. Basil, you have a great one, a safe one, and look forward to the show and the webinar tomorrow.
Thank you very much, Tom.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. You get the Dow right now up 103, Nasdaq's up 80, S&Ps are up 18. The Nasdaq got some real juice underneath it, folks. Volume-wise out here, what we're going to have is this. We're at 583 million right now, which is short volume. You get an expansion from yesterday, but that baby will come in at about 900 million on the NYSE. That was on the NYSE. On the Nasdaq, we've already done what we've done yesterday. The Nasdaq is going to come in at about 1.7 billion. What we are going to see out here, and this is going to get really intriguing, is that how these ETF structures and the indices attack the B point of these ABCs. The NQs already have taken it out and taken it out with volume, and it looks to me like the NQs are also going to hold price. I don't expect the SPY to go after it until tomorrow and the S&P to go after it till tomorrow. But what we will have there is you'll have a small ABC inside of a larger ABC if, in fact, you get them to break those B points with volume. The XAU, what do we have with the gold market out here? So if we go take a look at the XAU, this has wide price spread, has the juice behind the move, and if we take a look at this, the XAU is up 335. It's $70.57, and what you're going to see here is that when we broke topside on March 3rd, you did 51 million shares. March 4th, you did 82 million shares, and what we had done yesterday is that we came back into that area with 38 million. You're breaking topside again today, and I expect more than likely we're going to have about 50, 60 million. This is in a confirmed ABC structure on the way up. That's the XAU, the Gold Bugs Index. Gold Bugs Index right now is trading up $10. Much stronger, by the way, and this is an indication that the actual, the gold contract itself is going to go higher. Why? Because the XAU, the HUI gold bugs, they can't hedge more than a year and a half production. That's up $10 right now. We're at 181.05. Correlation there is just about the same. On March 3rd, we did 27 million shares. As it broke topside, on the 4th, you did 44 million, and we came into that with 21 million and 14 million. That's about as cool as you can get. So 14 million is the correlation against 27 and against 44. What I expect you're going to see out here today is that more than likely out here today, and I'll get this tonight, we'll probably do about 25 to 30 million shares. This is also in a confirmed ABC structure on the way up. Now, let's go over to that dead dog silver, man. Silver, no doubt, has been lagging in an incredible way. It still is, by the way, okay? So if we take a look at silver, what it did do today, which is cool, is that it got to a lower price. It is going to have lighter volume, thank God, and it's back inside its higher range. Yeah, we're been trying to wake silver up for a while. One of the tigers in the den said, let's wake her up. And I agree, man. Bottom line is that, so what we've done is this. You've done 44,000 contracts today. Now, that was coming into 85,000, so that's cool. So you have rejection of lower price. You have lighter volume. Now what silver's going to need is follow through once again. You're inside the higher range, too, okay, by by 9 cents, which is good. But bottom line, silver's a laggard in a big way, too. What I do expect, though, the way that so that's in the shorter term. The longer term, the way silver is set up, and silver is so volatile, it's insane, folks. Watch this. It looks to me that once silver actually catches the bid, which could be the next few days, because I expect this is going to continue, and you're going to see follow through here. Why? Because this dollar is going to get croaked. It's getting croaked, but that 92.50 is hanging out there. And what you have with silver is this. Silver has been having the toughest time just getting to $16. But I expect what you're going to see is that it's not going to stop at the 1770. It's going to go right to the 1850 mark, which is the highs of January of 2015. Let's go to Alex in Newton. Hey, Alex, what's going on?
Hi, Tom. How are you doing?
I'm doing great, man. How's the spring up in Boston?
We should get some snow on Tuesday, actually, next Tuesday.
Snow?
Always in April, always.
Oh, my God. I love it. Well, hey.
I don't know.
What can you do?
Always happens.
Oh, my God.
Tom, to be honest with you, I'm sick of this market. Because I expect, drop any day, and it's going up and up and up. Actually, I wanted to talk about... I actually was stopped today on the silver.
Okay.
But I want to talk about the Pandora.
Okay, so let's look at Pandora. So Pandora is down 20 cents. This is the streaming radio service. The low is $7. The high is 22. Okay, so what are we doing here?
Short.
Oh, man, I wouldn't be short.
Why?
Well, here, now, just looking at this, okay, it looks to me like it wants to go to 1150. But let me look at something else here. I want to see what the short position is in this thing.
To take a 2-minute chart.
So the short position is 15.5%. So 15.5%.
Mm-hmm.
You know, and I listen. I can understand fundamentally why you want to be short, because I love Pandora, folks. It's free. You know, you don't have to buy anything, and I don't even know how they make any money because they lose so much money. But this stock, you know, has just come down from $40, and you know, I think you probably got a dead cat bounce going here, Alex, and you know, 1150's kind of game. And that 58% short position is dangerous, you know. Anything like 6 or 7% of a short position is pretty dangerous.
I was stopped out on all my shorts today.
Yeah, well, that's good you took it. I know. Listen, I can't even believe I'm saying it. I'm the biggest bear in the world, but guess what? I'm a bull until this bigger ABC takes place, man. It's a sick scene, but it looks like now that we're going to have an ABC inside an ABC.
Yeah, don't fight the market, right?
Yeah, you know, it seems that the market is set up right now for this 3,000-point consolidation in the Dow, a 300-point consolidation and the S&P, and we'll see what side it's going to break. My take is it's going to break down. And the reason being, folks, is that, you know, when you look at this market, each and every time that we've come down, each and every time you come down, you have vicious expansions of volume on the way down. And we get to the highs, okay, it dies on the vine. Now, this time right here is setting up just perfect for the same deal. The reason being is that we've expanded up here way too fast. It's just like working out. If you work out and do a marathon, folks, you're dead at the end of it. Well, this is going to try to make the highs at the very end, and it's out of air. So when I say this is working out perfectly, it's, you know, between the window dressing, between the ABC structure, it just looks to me like it's going to die in the vine again. So, you know, what you can do is just hold your hands in your pocket for another couple weeks, man, and I think those short positions are going to make you a fortune, man, you know.
Aren't you worried about that silver and gold go in different ways?
I'm not. You know, you get the gold report. You know, these stocks are up 200 or 300%. Okay, how can you worry when that happens? You know, if I worried about that, guess what? You know, this has been one of the biggest runs in gold since 2002. You know, so it's like, okay.
Yeah, no question about that.
And what I learned. Okay, now this is a great question about the silver and gold. What I learned in 2000 and 2002, all these silver, you know, folks, these bulls. Here, just stay right here, because I got to tell you this story, because this is a big story just in the context of silver and gold. You stay right there, folks. Dow right now is up 98, Nasdaq's up 77, S&Ps are up 18. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. Dow right now is up 101. You get the Nasdaq up 79. S&Ps are up 18.5. We're talking about Alex and Newton. We're talking about gold, silver, metals in general. So what happened when I first got into this market in a heavy way, Alex, which was 2000, it was 2000 actually, is that you have gold bulls and you have silver bulls. And what had happened at that point, folks, there was hardly anyone that was bullish in metals, period, okay, because it was a bear market for 20 years. But the silver bulls would always be saying that, hey, listen, when you look at history, the history is that silver equals so many ounces of gold, right? So, you know, I looked at that, I says, okay, I got to really get my head wrapped around that, right? Well, when I really started getting my head wrapped around it, I looked at it like saying, you know, that really doesn't make any difference where we are today. And what this has to do with is I trade so many different vehicles, okay? Because what the silver bulls were doing were just going back maybe like 100 years. So when I looked at it, because I didn't know, I started looking and I says, you know what, man? So I just kept going back and find every story I could find. Well, it made zero correlation to me, because if you go back 3,000 years ago, where money really started, folks, okay, 5 ounces of silver was 1 ounce of gold. Yeah, that's when it was real money, okay? I says, well, that'd be pretty cool. I mean, that'd be worth a fortune, right? That would put... then, if you fast forward to the Depression, right, what ended up happening, it was 72 ounces of silver was 1 ounce of gold. I says, wow, that's really wild. And then, so you get the yin, which is 5 ounces to 1 ounce of gold, right? 3,000 years ago when everything was there. You have the Depression, 72 ounces of silver, 1 ounce of gold. And then the Revolution was the highest. The Revolution was in this day and age, okay? That was 17 ounces of silver to 1 ounce of gold. So what happened is that I didn't pay attention, and I haven't paid attention to that ratio yet. And the reason being is that gold is real money, and I don't think silver is. You know, because now they don't use it anymore. It's valuable, but, you know, so that's kind of my take on how it can be different. Now, that being said, I want silver to move, because I know the perception is that, you know, it should be moving, and it hasn't, you know, so.
Where do you think the biggest risk-reward ratio is?
I can tell you this. Well, you know, we've moved a lot of gold stocks out, folks, and we've done very well. We owned, you know, 4 or 5 gold stocks on Monday. I bought 4 more on Monday, and I was worried about buying them because we own so many right now, okay? So I think we're at that point right now. Now, I'm elated what's happening today, because we'll peel some of these off, because this is, to me, this is the larger ABC structure on the way up, and I think we're in it right now. And it's because of how the dollar is getting croaked out here. You see what I'm saying?
Yep.
So, and there's enough bearishness out here in the marketplace that it can really move, you know? And good old Janet Yellen, she put the match underneath the commodities out here today, you know? So
Definitely it is.
yeah, and I really think what's going to happen here it looks to me that the Fed's less risk is to actually let inflation take place, and they're probably looking at the whole rest of the world, and the world is in deflation. And deflation, folks, central banks they have no tools for deflation. Inflation, they might have made the decision, said, hey, guess what, man? We're going to make people spend money. And that's not going to be good in a longer basis, but, if that's what they decided. And that speech today, I thought that speech was a major speech. Because as she clarified many things, meaning that they're not going up on the rates. And as I said to Basil a little bit earlier, you hear the politicians, folks, that everything's bad. Well, guess what? Statistically, they're not. Statistically, jobs are down, money's up, communities are making money, people are building, so factually, the bottom line is that things are going up, not down.
To me, it was the major speak because she confirmed that they don't know what they're doing.
Yeah, great point. Exactly. And that's the same aspect that really I'm saying, that they would rather err on the inflation part than deflation.
Exactly. It's mostly political stuff.
Yeah, I guess politics is in everything, right?
Yeah.
There's no doubt.
Thank you, Tom.
Cooking, brother. Have a great one, man. Have a safe one.
You too. Bye.
Let's go to Kevin in Northern California. Hey, Kevin, what's going on?
Hey, Tom. Thanks for taking my call.
Thanks for calling, man. Appreciate it.
I have a quick question for you here, and this is a good transition because it falls on the heels of what you just said and what you kind of emphasized earlier about the economy being strong. And I'm just curious as to how you reconcile that with the fact that GDP is just limping along. And I don't know if you looked and saw yesterday, but the Atlanta Fed just revised Q1 GDP down to 0.6% growth. And, since even like 2008, since the bottom and the beginning of QE, GDP just has not been trending even as we've come out of this.
Well, no, GDP's been up. Okay, it hasn't been up how people want it up, that's for sure. So I can understand that. Now, the difference that I see between 2008, when you made that from 2008 to now, people are in a lot less debt. When we ran from the 2004 economy to 2008 economy, that was everyone's house in a piggy bank. The correlation that I see now, Kevin, and listen, it's blowing my mind too, is that people are making money hand over fist. In fact, you want to hear a statistic, folks, that is a mind blower? In Boston, Massachusetts, in Washington, D.C., and in San Francisco, 53% of the houses that got turned over last year were turned over by millennials, meaning they bought it. So 53%, and what's really cool about this is that you hear all the time that young people aren't doing anything. Well, guess what? Young people are basically not only doing something, they have money hand over fist, because if you're buying a house in Boston, the per square foot in Boston, folks, is $600 a foot, okay? I read that, and I can't wait. I'm going up there for a reunion this weekend, man, and I'm going to hunt. Kevin, I'm trying to figure out myself, how are they making so much money?
Well, here's my concern with that. One, I think a lot of that has to do with low interest rates and the fact that people are able to afford a payment. And two, you happen to have mentioned three markets that seem to be somewhat anomalous relative to the whole country. Those are sort of isolated economies within the United States, especially like Silicon Valley and Boston. They have these high-tech corridors that allow for just those sorts of millennials to be making money.
Well, there's nothing wrong with that.
No, there's nothing wrong with that. I guess I just question. To me, it seems like there's a real divergence between what's going on in the markets and what's going on in the economy.
Oh, I agree with you on that. That's a different question altogether.
But
the market is not the economy. The market.
I agree. And that's my point. The market seems to be floating up on, increasingly light volume, and I'm not quite sure exactly how that's.
Listen.
Occurring.
I understand. The bottom line, folks, is that it's an absolute ripoff. You know this whole thing about the 1%ers and the down. If you don't have money in the stock market, you're screwed. Listen. This is a whole different question that you're asking, okay? Because they are holding the stock market up, so people that have money in the stock market, yeah, they're going to make money. And the people that don't are not going to make money, okay?
I hear you, but there's also to the question of corporate profits being down last year by 5%. They're just
You stay right there. Stay right there. We'll talk corporate profits. They've never made so much money, ever. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is up 97, Nasdaq's up 79, S&Ps are up 18. We're talking with Kevin from California. And so corporate profits, Kevin, right?
Right. I was just referencing an article that's actually in the Wall Street Journal on the 25th this month, so 4 days ago. And it says that fourth quarter profits, starting at the end of 2015, fell 3.6% from the year earlier, and growth in 2013 was 0.6%. Growth in 2014 was 0.1%.
No, zero. Oh, you went backwards 0.14. You were talking
I
about.
was just going backwards because.
No. Right. Okay. Cool. So check this out, and this is pretty cool, folks. Okay. So no, those are all right. The corporate profits peaked first quarter of 2015. But what you want to wrap your head around is this. You can go back to 2007, 2008. They were so far over the last peak, it's unbelievable. Okay? That's the first part. The second part gets more intriguing. That's U.S. corporate profits. So when they say they're not making money, guess what? They made money hand over fist. This is after tax, folks. And that's after tax before they hid everything overseas and they haven't brought anything back. That is also hundreds of billions of dollars. So what has happened is that the corporate profits are fine. They don't want to basically divvy them up. That's the real number, man. It's like, okay, you know. So they were saying that the economy's bad in 2015 too, right? They never made so much money. So how is the economy bad?
Well, I'm not saying that it's bad. I'm just not saying. You seem to say that indicate that it was great, and it just seems to me that we've not even hit, 2% GDP growth, which is, we're still in the 1 point somethings, and to me, that's just kind of limping along. That's an economy that's eking out, not strong.
Yeah, no, I understand what you're saying. I've seen stronger economies. I'm not saying that. What I am absolutely saying, though, is that we would disagree in the aspect of eking it out. I think people have cash. They're not spending it. And what's so wild about this, folks, is that many times I've seen this, whether it's in the 90s, everyone, and this is half the politicians because they just jam it every time. Oh, everything's bad, okay? And what ends up happening is that people say that, everything else is bad, and but they're doing okay. It's like, oh, really? So how does this work? So everyone else is, down the tubes, but you're doing all right.
Yeah, I'm not saying. Don't get me wrong. I'm not saying everything is bad. I guess I'm worried mainly because of this divergence I see between a limping economy and a market that's just zooming on low volume.
But that's different. Like that's different. The economy, to me, is not the market, and the market is not the economy.
No,
it never has been. When people say it never has been to me. So you know.
We're in agreement there.
Yeah.
I mean that's what seems odd to me is it seems like the market really
I think
ultimately should be a reflection of the underlying economy, and when it diverges as significantly as it seems to be, to me that's a worrisome sign.
Yeah, and I would disagree with what you just said. I don't think that the market to me has never been what the economy is. I mean there's it keeps going forward, but those accelerations, the market goes into bubbles all the time, man, and then gets croaked, and then goes back up again. Do you know what I mean? So
yeah. Well, we're sort of saying. I think we're saying the same thing. I think we're closer to. I'm just worried about the implications. Just what you said for the market, at least for What I am definitely not saying, what I definitely am saying is that the economy's going along. Don't pay attention to politicians. Turn the TVs off, man, and you're going to be 10 times better off because guess what? Every one of them is selling fear, man. Have a great one and have a safe one. Folks, don't be scared of anything, man. Depend on yourself. The rest of it is a bunch of BS. You stay right there. We're coming right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Dell in Texas. Hey, Dell, what's going on?
Hey, Tom.
How you doing, man?
Great.
Thanks for calling. Thanks for holding. Appreciate it.
I love your show. I just stumbled upon it probably, maybe a month ago.
And how'd you find us?
I found you on YouTube.
YouTube. That's a beautiful thing. Well, we appreciate you growling and prowling with us. Welcome to the Tiger family, man.
Wow.
I like it. Totally.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Remember that there is part of life for which you are the explanation. Market-wise, let's take a look at it out here. We had the Dow Industrials up 97, NASDAQ up 79, S&P's up 18, gold contract up $21, traded $1,243 an ounce. Silver up 16 cents at $15.35 an ounce. Platinum up 23 bucks at $9.68 an ounce. Copper down 3 pennies at $2.20 a pound. Light sweet crude down 85 cents at $38.54 a barrel. Notes up 21 ticks, 130.02. Bonds up 1 full point and 5 ticks, 164.22. King dollar down 800 ticks, trading at 95.10. The euro is up 98 at 112, and the yen is trading at 112.71. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Janet Yellen come out. Bottom line, rates aren't going to go up for a bit. Lit the match under the fire. SPY up $1.81. You've done 89 million shares out here. The SPY is going to go after its B point tomorrow. The B point, folks, being 205.23. I suspect we're going to take it out with volume. Why? Because the Qs took it out today with volume. The IWM took it out with volume. That'll send the SPY up to the 211 area. 211 is the swing point, the high swing from December 2nd. We go over to the NDX 100, which is leading the charge out here today, big time. The Qs up $1.67. Took out a B point of an ABC structure on the way up. Did 29 million shares. Right now we're at 108.78. This is like a 5-point A to B, C to D. That price projection is 111.59. And right now we're at 108. Your swing points up there at 115. More than likely we'll probably get an extension of the A to B equals C to D and get up into that 115. Because you got to remember something. Tomorrow we start window dressing. Window dressing is not today. Bottom line, you'll see it in spades. IWM, small caps, got a bid underneath it also. Took out a B point, took it out with volume. IWM up $2.98. 38 million it needed. It did 45 million. Just ripped that baby apart. We're at 110.31. 114 is the price projection. That price projection will get you to the December 30th swing high. Gold contract. What do we have with gold? Gold caught a bid also when good old Yellen said, hey, guess what? You know, we are not going to be raising rates anytime soon. That wasn't the quote, but the bottom line, that's what the economy, that's what the market took out of it. So, gold contract up 21 bucks, did 188,000 contracts. And what you're going to see here is this, is that when we broke topside on February 11th, we did 333,000 contracts. We came all the way back into that, and yesterday you did 88,000 contracts versus 330. Guess what? Breaks topside once again, wide price spread, accelerated volume. We are at 1243. This baby wants to run to the 1392 to 1423 area. Big numbers, folks. Big numbers. Bonds. Let's go to the notes first. The notes held price out here. Had light volume, but the bottom line is that the notes held price. Right now, the notes, the 10-year note, closed up 22 ticks. Did a million contracts. Now, the million's coming into 1.6 million on the way down, but these bonds right now are at 130.03, and what's game out here is, I guess you could, 130.27's game. That's where the downdraft occurred when this got confirmed ABC structure was on the way down. That was on March 1st. We had went from 130.27 down to 129.18. King dollar. Now, this is the one you want to wrap your head around all of them. But King dollar, folks, came down, wide price spread, accelerated volume. What we have is this. King dollar down 795 ticks out here today. We did 29,000 contracts. Now, that's after the last few days. Picture how they went up. You went up with anemic volume. We had come down on March 10th. March 10th, you come down on 71,000 contracts. We went to a lower low on March 17th with 30,000 contracts. And then we went from a price point of 94.67, and we rallied up to 96.38. Not that that's a lot, but watch how it contracted, the volume. There was no buyers. First day up, had 12,000 contracts. Second day up, had 20,000. Third day up, had 14,000. Yesterday, we had 13,000. It blows out today, 29,000. We're going after the swing low, and I expect you're going to have another ABC structure on the way down. Let's go to the oil market. We take a look at oil. So oil held price, didn't go higher, but guess what? The equities, the oil equities went higher, which is saying oil also is going to catch a bid right now. The oil contract, we're at 38.53. We did 450,000 contracts today. That's going against 444,000 contracts. And in fact, I got to go get CLJ6 because I got to go to the last contract value, CLJ, because oil goes from month to month. And if we take a look at this one, what we're going to see, there she is. So you're going against almost 700,000 contracts. The 488 was going against 700,000 contracts. Bottom line is that you pull back with lighter volume. Oil hasn't rejected price just yet, but when you do look at some of the oil and gas stocks, bottom line, they rejected lower price today. They went higher. I expect you're going to see them continue to go higher. We go over to the silver market. We take a look at silver. Silver rejected lower price today, had lighter volume, and finally caught a bid. And silver now is in the larger trading range. Silver got down to a price point of $15 today. We did 44,000 contracts. That was coming into 85,000, so it rejected lower price, got back inside the higher range. Silver is going to try to, once again, make it up to the $16.17 area. And it does look to me that, looking at that silver market, once silver actually does catch a bid, we're going to see that baby probably very quickly at the $18 level, and it just may be the run starting right now through window dressing. So what we have out here coming into tomorrow, you get Wednesday, Thursday, Friday, next Monday. That's all window dressing, folks. And you can expect, after Yellen lighten this little match underneath this market today, you can expect some buying because the wind is there, everyone is back. Then we get to the highs, and guess what? You want to be getting your stops in. I'm going to be selling the top of this consolidation, as long as this volume stays light as we get up there. You stay right there, folks. We'll be coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish up 97, Nasdaq up 79, S&P's up by 19.5. And as we do each and every Tuesday at 20 past the second hour, we have our man, Mr. Andy Heck. And don't forget, folks, Andy has an outstanding show every Tuesday, Thursday, right after my show, 5 to 6 Eastern Standard Time right here. Now, no matter where you are in the country, if you're listening in your car phone, remember that right on your cell phone, the show comes in amazing. Just go to TFNN.com, hit Tiger TV. You can get the audio, you can get the video, you can get all the above. We stream 24 hours a day, live content every Monday, Wednesday, and Friday from 8 in the morning to 5 at night. On Tuesday, Thursday, 7 o'clock in the morning till 6 at night. And, of course, our man, Mr. Andy Heck, also has a great newsletter. It's the Technomental Commodity Report. You can come over to our website at TFNN. You go to newsletters, go to trading newsletters. You can test drive Andy's Technomental Commodity Report, 1 month, absolutely free. Andy Heck, what's going on?
Hey, Tom, how are you?
Doing great, man. Yourself?
I'm good. So Janet Yellen, with her dovish statement today, gradualism, lit the fuse again and gold popped.
Yep, no doubt.
I would imagine that oil will show some bullish stuff for the rest of the week. That would be my guess.
No, I agree, man. I like what oil did today because the oil stocks again took off, man. The oil stocks took, the oil contract didn't get croaked, but it didn't do anything, folks. But, bottom line is that those stocks took off.
Listen, it's consolidating. Here we got this April 17th meeting, this kind of special meeting of OPEC and the Russians. And I think there's a put under the oil market, until then. So we had a little bit of weakness today, but I don't think it's fallen away. After April 17th, we'll see what they say. It could be a different story.
Yeah, by April 17th, we could be running out at $46 oil, I figure. I figure we're going to be
and
there,
I think
actually.
we will be.
Yeah, I do
think
too.
We will
I
be.
do too.
So, gold looks good. I mean, gold had a nice bounce. We had a little bit of a consolidation phase, a little bit of a correction, but, she lit the fuse today, and I would think that silver is going to follow suit.
I hope
silver
so, man.
Yes, silver sat steady today. It came very close to one of those key reversal patterns, but it just couldn't make it. Yesterday's high was 1537.5. We got up to 1536. We still have a little bit of time, but
yeah,
the official.
Listen, I like what it did. There's no doubt, And you might have heard even when I was doing the update. What I really think is going to happen with silver. This is silver's so volatile, it's unbelievable, folks, and it hasn't been able to catch a bid, and it's been much weaker than the gold market. But the silver equities have not been weaker than the gold equities, okay? Silver equities are up 250% too. So that hasn't happened. So they're making plenty of money.
Right.
But, that swing point out there of $18, it looks to me like it's been having a hard time at 16. I got a feeling, man, it's going to hit 16 and say, see you later, 17. I'm going to go hang out at 18, man.
Oh, yeah. I think that what's going to happen, 1637 is my key level.
Yeah.
So I think we get above 1637, the next, it just goes in a straight line to $18.
Yeah, no, exactly.
Right.
Yeah.
That's
right.
it. And platinum, same kind of thing. 10.25 is the key level in platinum. We go above 10.25, this thing can go to 1400.
And that's how platinum does trade too, folks.
Yes.
It hasn't for a while, but
Right.
Bottom line, platinum.
Hey.
I've seen platinum go up $200 in a day, and 170 to be exact.
Yes.
Yeah.
Yeah, it happens. It absolutely happens. Now, copper. I actually like the action in copper today. Copper has been coming off.
Yeah, let me look at copper, man. Every analyst, folks, was whacking copper out here today, and I got a couple copper stocks. Let me look at this. HGK.
When it was down 3.5 cents. We got down below.
No, I know.
I think it's a scale down buy from here. I've been
Oh,
flattered.
listen, I like it. I like it. I just didn't look at the contract out here today. Oh, this is all right. So
yeah, there's a clear stop there, Tom. The stop is 214 on the May contract.
Well, yeah, you did 64,000 contracts. You're going into 100,000, and it rejected it. It rejected the 219.
Right,
and
right. Check the level below.
And check it out. Your break topside, folks, on this was 220. 220 on the 4th. Yeah, it's nice. Cool, man.
I think it looks fine. Now, we have a funky week here because we have quarter end on Thursday. So, as you say, window dressing, all kinds of things. I think it's going to be very interesting because let's talk about investors, in the stock market for a minute. So, this has been like a tale of two markets. The first 6 weeks of 2016 were appalling, right? I mean, 6 weeks of straight down, looked horrible. February 11th, I mean, the Dow, the S&P, the NASDAQ, everything was horrible. The last 6 weeks, we've crawled all the way back. We're up on the year now on the Dow. We're up on the year on the S&P. We're slightly down on the NASDAQ. And people are going to get their statements. They're going to say nothing happened. I would say in stocks, for me, this is a time of spring cleaning.
That's a great point. Yeah. No,
spring cleaning for the quarter. Because all of the things that took stocks lower over the first 6 weeks of 2016 are still here.
Sure.
And by the way, the Fed is telling us, we have to look past what she's doing. She's not raising interest rates. She's continuing with very accommodative language. She's worried. If she's worried and she has her fingers on all the data, we should be worried too.
Yeah, that's a great point.
So spring cleaning, baby.
Spring cleaning, I like it.
Clean out those portfolios.
No.
Get rid of anything that's not performing well, and get yourself set.
You know what's wild is that, and folks, this is really wild, and keep your eye on this in the future. What I've found is this, is that markets, whether you're long or short, give you 2 or 3 times to recover. And that's just how it goes. And then, and to me, if you're a bull out here, this is a chance that you put a stop in this time because you never know, when it won't come back because that will happen.
Yes, absolutely.
Yeah.
Listen, we had kind of a V-shaped market here, and for all those, if you were panicking, at looking at your portfolio, like a lot of people were back in the middle of February, like, oh my God, people looked at their portfolios. The S&P was down 11.5% on the year on February 11th. We have climbed all the way back. If you felt that pressure on that day, this is the perfect opportunity to take the pressure off, to lighten up.
Right.
Lighten up. Give yourself some room.
And you know what happens too, Andy, and folks, and I know you folks know this because if you're in the market. Andy just said we're down 11.5%. Well, guess what? When you're looking at your portfolio and you're saying, why am I down 20, 25%? It's because some of these stocks are down 50%, and that's just if you own the index, okay? Because these stocks have got smoked, okay? And many of them are not going to be back to the highs, but they're up, but there's rotation going on. I'm
working on an article now. Before the show, and it's kind of the 5 reasons why I think that next earnings season are not going to be so pretty. You're going to have the earnings from all the oil companies. The oil companies had a pretty rough quarter with oil down at 26.05. They're not going to make a hell of a lot of money next quarter.
Oh no! Listen,
the trade gap is widening, and even though the dollar's coming down, the dollar is still at a level which inhibits U.S. companies from making money abroad. Remember, over the last year and a half, 2 years, we've seen the dollar rally from under 80 to, now we're at 95, and we are going down, but this still affects corporate profits.
And what to keep in mind is that that's the dollar index, folks, because what has happened is that there's many countries, just as Andy's saying, right, that their currencies got destroyed compared to the dollar.
Oh, the Brazilian real. Ooh,
totally.
Ugly.
You stay right there, right?
Sure.
Andy and I coming right back, folks. Our phone number is 877-927-6648. Stay there. Come right back. If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And don't forget, folks, every Tuesday, Thursday, Andy's got a great show right here at TFNN. Get it right on your cell phone, TFNN.com. Just hit Tiger TV. It's on the right-hand side. And, of course, you'll hear Andy 5 to 6. You can get all of the programming at TFNN. He's also got a great newsletter, the Technomental Commodity Report. And what happens, folks, is this. Years ago, commodities were only in the future market. Now you have ETNs, you have ETFs. Okay, Andy has them right in his newsletter. So bottom line is that you can be trading equities and be in the commodities market. And of course, all of us use commodities every day. You know, it's going to get interesting here, man. I just think the whole commodity deal, man, because I really see us in a commodity bull, Andy. I do.
I see the beginnings of it. Absolutely. Yeah. Look, lumber went to 319 today.
Yeah.
That's a big move. That's the highest move in over a year. You know, I want to go back to what I was saying about the equity market.
Yes.
And Yellen's comments today, and they definitely, stocks went up. By the way, they didn't go up as much as they would have gone up in the past with such a dovish statement. You would have seen the Dow up 300 points.
Well, the NASDAQ did.
The NASDAQ.
The NASDAQ.
But remember, the NASDAQ is still down on the year, right?
Yeah.
We closed the year over 5,000. I mean, we went up 80 points or so. But my point here is, in terms of this spring cleaning, she's worried. They're keeping policy very accommodative because they're worried. They're worried about what's going on in Europe, and they're worried about what's going on in China. and the contagion and the potential for contagion. So if she's worried, we should be worried too, because she has a lot more data than we have at our fingertips. And she's seeing a lot of things, and she's talking to I'm sure all the Fed governors, the world has become smaller, and there's a lot of cooperation between the ECB and the Fed, between the Chinese bank. They don't want any sudden devaluations. Despite all the rhetoric of the political process right now with the presidential election, there is still a lot of talk between central bankers around the world, because their only target, Tom, is stability. And in the interest of stability, a lower dollar will, is something that a stable dollar is what they really want to see. They don't want to see the Chinese suddenly devaluing and the dollar zooming. They don't want to see the ECB. So I think there's a lot of coordinated central bank policy going on here. But her comments, if you read between the lines, they sent a worrying note for stocks for me here going into the next quarter. So that's why spring cleaning is my word of the day.
That's your mantra for the day. I like it.
That's my mantra for the day.
I like it.
Otherwise, let's just take a quick look. We went through precious metals. That looks good. The soft commodities, some interesting things going on there. Sugar had a big week last week. We came back a little bit. We came back. We dropped down hard on Friday, but we could consolidate here. Look, sugar moved from 36 cents a pound down to 10 cents a pound.
Right.
That was from 2011 until August of this year. Sugar is now, it's right under 16 cents a pound. A 50% retracement of that move takes it to 23 cents a pound. And there are fundamentally positive things going on in the sugar market, the sugar output from big producers like China.
Too much sugar, right? That's
forget about that. There's a lot of sugar that is demanded by the world, and you're not going to stop people from eating sugar.
No, you're
That's
not.
for sure. People are addicted to sugar like they're addicted to coffee.
Yeah.
And that's another one that's interesting here. But the decrease, El Nino did cause some production problems and decreases in production in China.
Can we do
India,
this? Can we go over? Can we go over the two? There's the El Nino, and what's the other one? El what?
La Nina.
Okay, can we go over those? Let's get some definitions.
So El Nino is caused by warming ocean waters in the Pacific Ocean near the coast of Chile.
And is that what we're in now? Is that what we have?
Well, we're coming out of that.
Oh, coming out of that. Okay.
That caused a pretty good warming trend in the United States.
Okay.
But it also caused a lot of typhoons, some droughts, some crazy storms in Asia.
Okay.
And that's what's affecting sugar plants now.
I see.
La Nina, which we could be going into, the jury is still out.
I see.
That tends to cause drought in the U.S. And if we are coming into that, that could really affect rain.
How does that get developed?
Well, it's a kind of a response. It's kind of the opposite of
the yin yang. Okay,
it's the
cool.
yin and the yang. Yeah, it's like the balance of the world, right? So a drought across major growing areas, this planting and growing and harvest season, we're already seeing, let's put up a soybean chart. We're seeing some action in soybeans, not big action, but we're seeing a recovery, a nice little recovery here. You could see on the daily soybean chart, which closed today at the highest level in quite some time. We're over $9 a bushel.
Right.
Corn is picking up a little bit. Wheat is picking up a little bit. So, this could be a very good time to start looking at some of these grain markets. We're coming off 3 straight years of bumper crops. And while, the farmers, they're hedging now. So they're kind of locking themselves into another disastrous financial year here. But what they're hoping for, Tom, is they're hoping that, we get some significant price increases this year because of weather-related things, and that will get them to have a more profitable year in 2017 when they start hedging those crops. Right now, kind of the die is getting cast right now.
I was listening to this farmer today, large corporate farmer, but actually, he wasn't a corporate farmer. It was a very large family farm, though, that is a large corporation now because they've been doing it so long. And he was talking about that technology-wise, folks, that he felt that the farming business was right behind the military as to how much technology has brought their yields forward. Isn't that wild?
Oh, yes. That is absolutely true.
Yeah.
But it doesn't matter about technology. When Mother Nature throws a drought across the Midwest, you could have all the technology in the world.
Yeah,
Prices are going up and crop yields are going down.
Right.
Because at the end of the day, you can't. It would be wonderful if we could make a giant glass, weather-controlled, climate-controlled, growing thing that spans.
Jim Carrey.
Right. But that's not happening.
No.
And it's basically Kansas, Nebraska, Illinois, all of the Midwestern states, where these Iowa, where all of the wheat and the corn and the soybeans grow and the cotton and all this stuff in the South. This is what it's the weather that's gonna impact. And you know what? The interesting thing is, and we've talked about this before, but it's worth mentioning, that demographics, worldwide population is growing. There's more mouths to feed.
Right.
So each time we have a weather issue, that's why we make a new all-time high in these commodities.
Right.
Because we've come to expect the world needs bumper crops every year at this point.
Yeah. No, I can see
That's
that.
important.
I can see that. It'd be a total.
So we get a drought, man, but the sky's the limit. What was the all-time high in corn? $8.40 a bushel? Hey, we could see $10 corn next time. Soybeans set just under $18 a bushel. We could see $20 a bushel. Wheat, $13 a bushel. We could see $15 a bushel in the right, and that will be weather-related. There's no question about it.
And what will also happen is that, I went to there. And that means they all go at the same time, too, which is a trip. Yeah.
Oh, they all go at the same. I mean, that
throws a match on inflation, folks. No doubt.
Oh, are you kidding? By the way, I always say, everyone says oil is the most political commodity in the world. I say wheat is.
I agree.
Bread is the staple, man.
Bread is it. Listen, man, thank you so much. We look forward to show at 5.
Thanks, Tom.
Awesome. You stay right there, folks. I'll be coming right back. And, of course, Andy's going to be coming right up with you at 5 o'clock Eastern Time. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over to Asia. We'll see what Asia looks like as we're going to be opening there in about 5 hours. If we go to Shanghai first, Shanghai, folks, was down 1.2% last night. You're trading out at 29.19. And that baby there, let's see what she was going into strength. Yeah, and she went into a dramatically lighter volume. So check this out. So we came down last night with 18 billion shares. You were going into 31 billion. Bottom line, Shanghai is going to go topside tonight. And what's game for Shanghai, which is going to get really intriguing here, is like 32.50. And that's a big move. It's like a 10% move. The UK, let's go from there to the UK. If we take a look at the FTSE, what you're going to see in the FTSE is this. The FTSE today was flat, and the FTSE is going to give us a huge amount of information, and this is what I expect we're going to see. So the FTSE has been hanging at the exact same spot, okay, going all the way back to the 2nd of March. I suspect tomorrow what you're going to see is it's going to go after those highs, and we'll see whether it can take them out, meaning the highs of 61.94. Now, what I thought was going to happen, if you'd been, listening, is that I thought that the FTSE would actually take that swing point out first, and then would have the correlation of our own S&P. Now, just the opposite has happened. What you had out here today is that the NASDAQ 100 took it out, the NASDAQ took it out. In fact, here, check this out. If we go over to the NASDAQ, the composite, folks, is in a monster ABC. And if we go over to this composite and take a look at it, so check this out. We're up $79. We took a B point out today. That B point is 48.35. Your C point, your A point on that is the low of us that was established on March 10th, which is 46.07. So that's going to give you what? That's A2. That's 228 points. And your C point is 47.35, which ends up being, that's 3, that's 6. Okay, so 49.63 is your A to B equals C to D. And what that's going to do, that's going to come right into the gap of the gap down of December 31st. So the bottom line is that you get some real game out here for higher price. If we go to the DAX in Germany, we take a look at the DAX in Germany. What we have, DAX in Germany out here is at 98.87, and the DAX in Germany is going to go after these swing highs tomorrow too. Let's go to Rick in Orlando. Hey, Rick, what's going on?
Well, a lot. Thanks for taking my call, Tom.
Sure, thanks for calling. Thanks for holding.
You betcha, no problem. I was just listening to you and Andy. That's interesting about commodities. But what I was calling you about namely is I've been having a blast for the last couple of months on Nadex.
Yes.
And I heard about it on your show, and I thought, let's take a look at this. And, of course, I'm happy today because yesterday I went long in a weekly in the /TF, the Russell 2000.
Okay.
And it popped right up. But one thing I did notice, so anyway, I'm letting you know that. I'm having a blast on Nadex. Second is today it looked like between the ZN with a 10-year note and my NQ that I put on Thinkorswim, my NQ and my /TF and my ES, I can see them all at once, there was divergence just this one day.
Yeah, there is divergence. There's no doubt. And so specifically, folks, is that normally you get a market that's going topside, those bonds will go down. Bottom line, they both went up. And I suspect that has to do with the market's paying attention to Yellen saying, hey, we're not going to go up on rates. And so, okay, you're not going to go up on rates. That means that bottom line is that the rates are going to come down. And, we're at 1.8 right now on the 10-year. And the structure was 1 million contracts. This is on the 10-year note, folks. 1 million contracts against 1.6. And we'll see, the bond market's closed right now. It opens back up at 6 o'clock Eastern Standard Time. We'll see how this holds and what happens tomorrow. Because if we pull up this 10-year right now, what you're going to see is that it did hold price. We closed at the highs of the day, and that's saying, hey, guess what? Where we broke down from was 130.27, and that can run to that level, man. You know, so.
Cool. Okay. So mainly the Yellen effect on this. Okay. I thought there might be something special that I had missed because I remember
you know, and that was always the danger, you know, in general. But I suspect, well, yeah, right now it held price. So if it holds price, listen, that can go up there. The correlation, however, is exactly how you think it is, meaning when you have higher markets like this, folks, bonds normally sell off, you know. Yeah. But they didn't, you know.
Yeah, you've been saying for several weeks now, pay attention. It's giddy. The bonds are giving us the most information.
They are.
So
they are.
I've been listening.
Well,
thank you, Tom, so much.
Thanks so much. Have a great one. Have a safe one. And folks, if you haven't test drove the Nadex platform yet, great time to do it. You can come over to our website at TFNN. You hit the Nadex banner. It's on the top of the side. You can bring up the exchange. They'll put $25,000 of paper money into your account. And bottom line, you'll see how these contracts trade. My son and I do a program every trading day, 10 o'clock in the morning. I'm trading that Nadex platform every day, folks. Bottom line is that it's a defined option contract platform. And if you trade, whether you're trading the NDX 100, whether you're trading, if you're trading gold or oil in the futures contract, it's a must that you go do it. It's not even close because the correlation is that you're going to pay, you know, $1.50 to $3 premium, okay, intraday. But what happens in both of those markets, meaning the oil or the gold market, they move, you know, in the gold market, you know, $2 is nothing. In the oil market, you're not going to pay that much. You're going to pay about 20, 25 cents. They both move much more than that both ways, whether you're a bull or a bear. You know, so bottom line, check it out right on the front page of TFNN. And do not trade those babies until you get used to the paper market. That's the bottom line because they're very easy to understand. There's a lot of videos on there. Check it out and then listen to us in the morning because we walk you through it every morning. So we have Asia wants to go higher tonight. What I do expect you're going to see, actually, let's go to Hong Kong, HKG. We did Shanghai. If we go to we go to Hong Kong. Okay, so Hong Kong was up 0.1% last night. Oh, this is set up nice. Oh, this is pretty sick. So what Hong Kong had done last night is this. It rejected lower price, had lighter volume. More than likely, we're going to see Hong Kong. Hong Kong's at 20,366, and game on that is 21,700. That's a big number. Yeah, that's a huge number. So you're talking about another $1,400 up. Now, those, by the way, folks, is that the Hong Kong market, that is still a market that wants to go lower, you know, and to basically come back and to wrap our own markets. Let's do that right now because then you can see where this correlation is taking place. Okay, so picture. If we take a look at our own S&P, right now you're at 205. This is perfect. I got one more segment. Okay, so when we come back, I'm going to basically give you my take on where we're going to be or where we're going in the next couple of weeks and what I expect we're going to have happen. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. And, of course, if you're in your car, don't forget, Andy's going to be coming right up at TFNN 5 to 6. Just go to TFNN.com on your phone, hit Tiger TV. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key market markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. Okay, so let's go. I want to go over the full course of where we've been and where I suspect we're going to be. So I'm going to use the SPY to do this, because what happens with the SPY, folks, is that you don't have to go back and forth and look at the volumes for the indices versus, meaning the NYSE or the NASDAQ. Okay, so what we did is this, okay? When we go back, when we had come down in August 24th, that was testing the lows that were generated in October of 2014. Now, we came down and we hit a low in the SPY of $182. We did it with 500 million shares. That was fast, furious move. And guess what? When things go too fast, it was exhausted. The sellers were there. Guess what? You do a bounce. So we go topside again. Now, as we go topside, we hit a high with 95 million shares. Well, 95 million, give me a break. We're down 500 million. That was testing 70 million. Bottom line, what do? That high that was generated out here November 3rd, it waits, it goes sideways with light volume, breaks apart January 2nd, right? Well, when we came down, we did the same thing, fast, furious on the way down. We get to the price point of the 181 again, same price point. What do we do it on? Well, we do it on half the volume, 286 million versus 500 million, right? That's right off the bat. You get a rejection of lower price. You have half the volume. Guess what? You're going to bounce. Now, as we bounced, what do you have? Well, we bounced and we got up to 194 and we came back and tested again. When we tested again, even lighter volume. So 219 million was the February 11th low versus the 286 million versus the 500 million, okay? So that's why, bottom line, I'm saying it's going to bounce, because guess what? You can't bust them down, you're going to bust them up. Okay, so now we're going to get a little bit closer inside here. What do we do when we do the bounce? When we do the bounce, folks, we go topside, you have a small expansion of volume, you pull back with lighter volume, and then we take out a B point and we take it out with volume. When we did that, the SPY took it out with volume on March 10th. So that sets up $211 in the SPY. $211 brings you up to the highs that were generated in December as well as November. It's 211.66 to be exact. Okay. So now where do we stand now? Now what you have is this. The NQs took out a B point today with volume. The small caps took it out with volume. I expect what you're going to see tomorrow is that the SPY is going to take it out with volume. Now, that being said, that is still not going to bring you up and over the 211. What the SPY would bring you, the smaller one, is 209. Okay, so now we put all that together. So now, probability-wise, you want to go to the high. Now, that being said, let me show you this. This, again, is a straight line move up. You do a straight line move up, and what happens? You get tired. The market's going to get tired again. I suspect what we're going to see is you'll see a contraction of volume. We've had a contraction of volume versus the way down versus the way up. What I expect you're going to see is you're going to see a dramatic contraction the next couple of weeks. And this is what it is. So on the weekly basis, you already have it. On the weekly basis, we came down on the SPY with 900 million shares, 900 million shares, 1.1 billion shares, and 800 million shares. 2 weeks ago, we did 560 million shares. Last week, we did 335 million shares. That was only 4 days, remember. This week, on a Tuesday, we did 153. So what you're going to see, I suspect, is that we're going to get up into that whole 211 deal, but to do it with about 500 million, that's going to be the sell. See ya. Don't want to be ya. And what is it going to do? Go down to the other end of this consolidation. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it, step into it, take ownership of it, and fly with it. Thanks for being here, folks. Stay tuned for Andy. Look forward to speaking to you tomorrow morning. Go get him, folks.